This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil and gasoline inventories fell last week, buoyed by stronger demand and exports, while distillate stockpiles rose, the U.S. Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 3.2 million barrels to 419 million barrels in the week ended July 18, the EIA said, double analysts' expectations in a Reuters poll for a 1.6 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 455,000 barrels in the week, the EIA said. U.S. crude exports were up by 337,000 barrels per day, BPD, to 3.86 million barrels of oil per day, while net U.S. crude imports fell last week by 740,000 barrels per day, the EIA said.
Oil prices rose on Thursday, buoyed by optimism over U.S. trade negotiations that would ease pressure on the global economy and the sharper-than-expected decline in U.S. crude inventories. Brent crude futures gained 21 cents, or 0.3%, to $68.72 a barrel by 0335 GMT. U.S. West Texas Intermediate crude futures climbed 22 cents, or 0.3%, to $65.47 per barrel. Both benchmarks were little changed on Wednesday as markets monitored developments in U.S.-European Union trade talks, following President Donald Trump's tariff deal with Japan. The agreement lowers duties on auto imports and spares Tokyo from new levies in exchange for a $550 billion package of U.S.-bound investment and loans.
Moving on to the top news in the energy sector.
Investors are expecting top U.S. refiners to report higher second-quarter profits, bouncing back from losses during the first 3 months of the year as unseasonably strong diesel margins boost earnings. Fuelmakers have reaped unexpected profits from producing key products in recent months, a respite after earnings slipped from record levels in 2022, when a recovery in demand following the COVID-19 pandemic and Russia's invasion of Ukraine lifted prices. Some forecasting groups had anticipated weaker margins this year as demand was expected to slow. While analysts expect a recovery from the previous quarter, profits are likely to be weaker than a year ago.
The European Union's expansion of solar energy is on track for its first annual downturn in more than a decade, industry data showed on Thursday, as some governments reduce subsidies for rooftop solar panels. The trend reflects shifting political priorities in Europe as some member countries have scaled back green measures or support for clean energy from budgets stretched by spending on defense and local industries. The EU is on track to install 64.2 gigawatts of new solar energy capacity in 2025, a 1.4% decrease compared with the 65.1 gigawatts installed last year, Industry Association Solar Power Europe said. Next, we have the top news in metal markets. Gold prices extended losses on Thursday from the previous session as easing trade tensions increased risk sentiment and weighed on demand for safe haven assets. Spot gold was down 0.6% at $3,362.59 per ounce, as of 0930 GMT, after shedding 1.3% in the previous session. U.S. gold futures dropped 0.9% to $3,367.30. Following this week's trade deal between the U.S. and Japan, 2 European diplomats said on Wednesday the European Union and the U.S. are also edging toward a trade deal that could include a 15% U.S. baseline tariff on EU goods and exemptions.
U.S. copper futures hit a record high on Thursday, expanding their premium against the global benchmark with just over a week left until the planned date for the U.S. import tariff on the metal. The most active COMEX copper futures rose 1.1% to $5.884 per LB after hitting a peak of $5.959, while the 3-month copper on the London Metal Exchange was steady at $9,926.50 a metric ton by 0930 GMT. The premium remained below the 50% import tariff planned by President Donald Trump as the market was waiting for confirmation of the August 1st deadline and a list of the copper products to which the levy would apply.
We will now look at the top news in the agricultural sector.
A Chinese buyer has signed a deal this week to import 30,000 metric tons of Argentine soymeal, as animal feed producers ramp up purchases to take advantage of softer prices in the South American market, free trade sources told Reuters on Thursday. This marks the second such deal since Beijing approved Argentine soymeal imports in 2019, following the initial purchase by Chinese buyers in June. It is attractive to import soymeal from Argentina, said one Singapore-based trader at an international trading company. Feed makers can make some profit by importing Argentinian soymeal.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.